Okay, folks, good morning and welcome to Swing Trading Today. I titled this video, Buy the Dip, Dump Gold and Silver. And the answer is no and maybe. We're going to go through some charts of the pre-market activity and we'll talk about how I believe that this market is going to open up today. It doesn't necessarily mean that's how it closes. When we have a market that breaks down as we did yesterday, and this was in the cards, we knew it was coming, it happened, and it normally doesn't end with the futures being spiked up in the pre-market. Normally, you're going to get a fade. We'll go to those charts in a moment. Now, yesterday, we booked about 60% profit on our NUGT trade, and a lot of people are probably going to be shocked to hear that we made all those profits real. We did so because it was part of the plan. We went into the trade knowing exactly where we wanted to lighten up. It began on Friday, and it culminated yesterday. Now, while we're still long, we do plan on adding more, ideally on a pullback. And last night on Market Wrap, I spoke in great detail about our strategy for rebuilding our NUGT trade, but this time even larger than what it was before, because now we are buying. Ideally, this is a hope, right? We hope that we're going to be buying it back at a lower price. The market will tell us whether or not we are correct in our planning. Do I want to buy stocks here? No, there's nothing out there that I find attractive. Do I want to buy silver? No, but I don't want to sell it either. We'll continue to stay long of that position. And we did book profits yesterday on Amazon. Amazon, let's bring up that chart really quick, and then we'll go to the pre-market activity. Bear with me. Got started a little bit late this morning. Normally I'm prepared better. Okay, so we shorted Amazon here on the 18th. And of course, the market doing what it does best when you try to short the market automatically jabs you in the ribs and says, you know what, haha, you're wrong. And the shares shot up higher by about $25 the next day. We stayed short, and sure enough, ultimately it paid off. It was down over 4% alone. So a nice trade. We had sold the 2000 strike put options, not sold. We bought the put options 2000 strike expiring in August, and good profit, nice profit. So we are out at current. The easy money's been made here. We do have a plan for reopening shorts. We did book profits on our, at least half profits anyway. We still have half position open on the SQQQ, which puts you short of the triple Qs. We do plan on adding back that position, ideally at lower prices. Look at this volume yesterday. But we want the shares to come to us because shorting is a tricky business, right? It's an election year. The powers that be do not want you shorting stocks. You had the president come out yesterday telling us stocks are looking good. COVID, not a problem here. Nothing to see here. No worries whatsoever. And to be honest with you, I kind of believe him, and I'll tell you why in a moment. Many times, and we're going to go over the news right now. Many times, when you have an event that soaks up the headlines, such as this, I have to be careful what I say here because I'll get censored. The video gets censored, possibly even deleted. So I need to be careful. Because it's not family friendly. this virus, I'll say virus, you know what I mean? When something like this scary, takes over the headlines and begins to dominate as it does, and begins to really threaten the political establishment. I mean, even the Federal Reserve, what are they going to do? They're going to cut rates? What's that going to do? Unless, of course, this is all about nothing. Do I believe that? No. Am I suspect? Sure. But there's no truer way of knowing whether or not something is all about nothing and the media is just hyping things up. It's when something else takes over the news. And I'm going to go to that in a moment, what could quite very well do it. And all of a sudden, 2 weeks later, you're looking back and say, what happened to that headline that was driving the news? Everybody was so afraid of. This new thing came up, and I forgot all about it. The world was coming to an end, and all of a sudden, now it doesn't matter anymore. So I'm going to go to that in a moment. And it all has to do with oil prices. Always follow the money. But before we do that, now I'm not being a denier here. All right? So please don't take it that way. I'm very open-minded. I want to be a barometer for the news that's coming out and take a pulse. I want to see what the governments are doing, not what they're saying. See what companies are saying as well. How is this impacting their guidance? Because that's reality. They're not going to purposely knock down their own share price. So here's a headline: French tourism crashes by 35% amid virus breakout. Europe on recession watch. I mean, Europe gets a huge amount of Chinese tourists, and their tourism business is now under pressure even further because you have 12 cases confirmed over in France. And 10% of their GDP is, of course, tourism, and I think that's on the light side. Now, going to what could knock this this disease off of the headlines is oil prices. Let's take a look quickly at a chart of oil and how it performed. Let's go to a weekly chart. And I want to bring up another chart as well of the oil stocks. Oil down, this is just this week alone, down about 3.75%. And it looks like, given these stokes, they're probably going to roll over. Absent a geopolitical event. Now, I say this constantly. I'll probably get a note saying you keep repeating yourself, and I repeat myself for a reason. It's because it's to remind myself and members and those who view me constantly of as to the realities of the world. And the reality is, when you have tensions in the Middle East, oil prices rise. That's good for the frackers here in the United States. Those are high-paying jobs. Those are also Trump voters. This is an election year. Those are facts, and we only deal with facts here, not hyperbole. So oil is under pressure. And when you take a look at the XLE, and I warned about this over the weekend, a major break this week. And here's the chart that I was using. We were looking at a bear flag setup on a weekly basis right here. This is drawn as a triangle. You can easily rearrange the upper band and make that a bear flag setup. Either way, call it cupcakes. It doesn't matter what the formation is. I'm not into that much. The fact of the matter is we had a defined resistance level and a defined support level. That defined support level was broken last week. We had a continuation breakdown this week. This should be no shock to anyone. So if you're listening to those on CNBC telling you to go buy the energy stocks this week because they're on sale, maybe at some point in time in the future. Actually, this is not even a daily chart. Let's go to the weekly chart. you don't go buying these shares yet. There will be a time. Here's the bear flag setup. I thought I was losing my mind. Okay, so you can see all the topping action here, weekly chart now. We broke the lower band of support gap down. This, in all probability, is going lower. They're going to try to talk you into buying stocks. I heard some ridiculous stuff on the news yesterday about, I couldn't believe my ears. What was the phrase I heard from this one fund manager? Fast forward dollar cost averaging on this pullback. I never heard such a ridiculous comment in my life. I'm a huge fan of dollar cost averaging. But dollar cost averaging, there's a logic, there's a theory behind it. You don't fast forward your dollar cost averaging. I'm going to find that clip. I'm going to play it. This was on Scott Wapner's show yesterday. And what the person was saying, you can get it live on their website. Not live on their website. You can get the replay on their website. Was to buy Square. Look at how extended Square was. And she was saying buy Square. This is why I don't watch that program any longer. I'm eating CNBC in general. I just had it on in the background listening to it. And yes, we rallied off the lows, but look at how extended we were. This is not an entry point to go fast forwarding your dollar cost averaging. Absolutely insane comments to make from a so-called professional. Let's get to the pre-market. Actually, no, let's go to the economic calendar. Today is the 25th. We got consumer confidence at 10 a.m. Eastern Standard Time. Later this week, we're going to get the GDP number. That can move the markets. Durable goods can certainly move the markets. And then on Friday, inflation numbers, Chicago PMI, that could definitely move the market. More consumer sentiment numbers. So we have a bunch of economic data coming out this week. And watch for the revisions, folks. The headlines have been coming out okay of late, meaning the scheduled reports that was scheduled to come out, but the revisions to prior reports have been getting moved lower, and the markets have not been paying attention to it. Maybe they will now that we've finally broken here, but the fix has been positive headlines, negative revisions. Let's see whether or not they change up that game plan a little bit. Let's go to the pre-market futures action. All right, so we were higher. This is the NASDAQ 100 4-hour chart. These will all be 4-hour charts. And we are beginning to roll over here a bit. We were higher by over 50 points a bit earlier. Now, this may still look appetizing to go buying the pump up this morning. Be very, very careful here, because many times they'll get everybody excited. They'll probably come out with some upgrades this morning. Lord knows, you had CNBC have Warren Buffett on yesterday. Lord knows who they're going to have on this morning to try to pump up the market. All is well. And then all of a sudden, by 10 a.m. Eastern Standard Time, the market's in the red. Be very, very careful. So while we're up this morning, clear resistance above here at 92.32 on the NASDAQ 100. Moving on to the S&P 500. We are up about a quarter percentage point, well off the highs of the session. Do we put in a higher low, or do we fail to hold support and take out 32.12? That's why I have this alert up here. Don't sit in front of your computer. There's no need to. Set your alerts. Go about your day. We're not day traders here. So again, folks, don't let them lure you into this market. Rarely do you get 5% move lower without a follow through to the downside during a correction. Let's take a look at, where's my Russell? Do I have it up here? It doesn't appear so. There we go. The small caps, they really surged overnight. They're still up by about a half percentage point. But again, coming off the highs of the session. So again, folks, we challenge ourselves. Do we put in a higher low or do we fail? Do we break down to new lower lows? I'm not willing to step into this void and become a market maker and try to keep this market held up. Not in my interest. I don't think I'm large enough to do that or influential to do that, nor liquid enough to do that. I think that in all probability, we are in the coming days going to see lower lows. And there will be a time, there's no doubt about it in my mind, that we're going to bottom out here at some point in time. You need to get your list ready. With these sell-offs comes great opportunities. So get that list together, especially those stocks, if you're an investor, of those high dividend payers, because as the Federal Reserve at some point in time decides that they're going to fight viruses or wars or whatever by lowering interest rates because they're delusional, they'll cut those rates, and you're going to see a scramble even further for more yield. And you're going to wish you had those dividend-paying stocks like Verizon, which I believe even closed up yesterday. It did reverse on the day, unfortunately, yesterday. Was that today? Yeah, this is yesterday. It was up, and then it reversed on the day. But still, it held up fairly well. But it's probably going to break here. This is a high yielder. So get those shopping lists together. Let's take a look at bonds. So I went over with members last night on Market Wrap, bonds. Now, it appears as though we are flirting with breaking out to new higher highs on the day versus yesterday. I don't think that this is going to hold. I think that this is probably going to roll over. I went over this last night on Market Wrap. I'm not going to repeat myself this morning. If you're a member, go to the members area, go check out the link, because I don't think that we are going to break out to new highs and close there. We may get a new daily high. It looks as though I'm going to be proven wrong here, but I'm going to put myself out there and say I don't think we're going to close at that high. And in all probability, we're going to roll over on the 10-year and on the, to a lesser extent, the tips. The tips may have a little bit more room to go here, but then I think that in all probability, we're going to roll over. That is not going to bode well for gold and silver. And we'll go to those charts in a moment. But first, I want to go to the dollar. And this is just going to be a short-term pullback on bonds. They're very extended. The dollar is holding a bid. Good morning, William. You prefer William or Bill? All right, so what we're looking for here on the dollar is either a breakout or a breakdown. If we get a breakdown, two things could happen here. One, you see a sell-off on gold, the miners, silver, because geopolitical fear. Well, all right, so there's a negotiation. Hey, well, good morning to you. Either we get a sell-off on gold and silver due to the fact that you have geopolitical risk coming off the table, or they spike higher because gold and silver are priced in U.S. dollars. And frankly, the dollar's strength is active as a headwind for gold. I think it would be a lot higher, probably at all-time highs, were it not for the strength in the U.S. dollar. So the dollar showing some strength here this morning. While it's still down, it's off the lows of the session. But nothing really actionable here. In fact, the reality is that we're putting in lower highs and lower lows. So let's be careful here. If you're long of assets that trade inversely of the dollar, be very, very careful. Let's take a look at gold. Hey, Reno, good morning to you. Thank you very, very much. I appreciate that. You're very welcome. It's my pleasure. If you have any suggestions for improvement, please let me know. So here's a chart of gold in the pre-market. Now, what it appears has happened yesterday is that there was some notional selling of about at least $1 billion worth of gold, probably on the COMEX, and they took gold down off of its highs. But frankly, we were booking profits on our gold mining trade well in advance of that dump. Because the reason is that we had a predetermined target. Technically, it was rational to begin to book profits, and so we did so. And then they came out and they dumped the shares of gold on the COMEX. And this morning we're down around 1.33% off the lows of the session. Do we break out here? Not quite sure. Not quite sure yet. It looks as though there's a strong possibility that we may, but we do have a price target to begin rebuilding our gold mining trade. Ideally, let's check out NUGT in the pre-market, see if they priced it yet. I went over price targets with members last night of where we want to put in our advanced orders. And we haven't seen any movement at all this morning. So I could tell you right now that it's not at our price target, at least at the last read. So gold down on the session. We're still very, very bullish on gold. It's just not time yet. Remember that it's not in the best interest of the powers that be to have gold at new all-time highs, because then that becomes the narrative. Hey, Chris, good morning. Thank you very much, sir. You're showing that. What price you showing, Will? I can take a look at the semis, yeah. Yeah. That's the price I'm showing too. I'm just not showing the activity for this morning on Thinkorswim or another platform. Let me drill down to a lower time frame. Maybe that's what the problem is. I was getting a bid on Amazon pre-market earlier. Let's go down to a 30-minute. Yeah, nothing yet. Move my slider over. Nothing yet. What you may be looking at is the after-hours activity last night. I think we weakened up on gold since that point in time, and we should open up a bit lower than where we closed out the after-hours session yesterday. We'll see. Let's check out oil. And I mentioned earlier the fact that that we had some headlines, and I don't. You know what? I'm losing it. Here, I forgot to go over these. So I warned earlier about oil, and that the one way to get this virus off the headlines is war. And you saw the Israelis attack positions over in Syria and in the Gaza Strip yesterday, I believe. Then last night, over 90 rockets fired from Gaza. Things are heating up there. What'll this do? Ultimately, put a bid under the barrel of oil. What else is going on over there? The Turks challenging the Russians over in Syria. They're now requesting air support intel and Patriot missile batteries from the United States and NATO. So if you're wondering what it'll take the coronavirus off of, and I shouldn't have said that because YouTube is going to edit this now. Hopefully they don't delete it. If you're wondering what's going to take it off the headlines, war in the Middle East will certainly take it off the headlines really quick. And you'll be wondering 2 weeks from now, whatever happened to that flu thing that was going around? All right, let's get back. Let's go to oil, pre-market. We'll go with light sweet as we normally do. 4-hour chart. What I'm looking for here, and you can see they're trying to take it down, is a higher low. And I don't know if we are going to get it. So watch for a break below yesterday's lows here. Now this could easily hold. We are seeing a potential in quotation marks, higher low on 4-hour RSI. So oil, keep an eye on it. The headlines are starting to turn in favor of oil. I know it sounds alarmist, but folks, every time the price of oil goes below or flirts with 50, all of a sudden we're sending aircraft battle groups through the Straits of Hormuz. So I don't time that. So let's just watch the price of oil. Let's go to nat gas. Nat gas. Let's just say it stopped going down here. This is last Thursday's reversal bar off of the inventories report. So again, all I want to do here is do nothing. I just want to watch. The markets will tell us when it's time to act. And this is why we get together so early in the morning to do our homework, set our strategy for the day, and go about our business. Now, RSI is indicating that we may have a breakout here on RSI way too early to make that an actionable trade. So the trade to do here would be the UGAZ. If we do decide it looks as though we have the consolidation beginning to build here. But this remains a watch. I wouldn't be ready just yet to pull the trigger on nat gas trade. Actually, we were stopped out last week, or 2 weeks. Was it last week or 2 weeks ago on UGAZ? All right, let's go to. I want to take one last look at gold. We're coming off the lows of the session still. Let's go to the semis. And I will let everybody go about their day. SOXX. All right, so Will, what I want to do here is what we generally do, and that's to take a look at the higher level view. And on a weekly basis, I mean, the trend is under pressure. We haven't broken down yet, but in all probability, we are going to. See if I have the annotated view here. Usually I use the SMH. I don't think I do have it here. Look at that. What the heck was I looking at? Why does this chart look so different? Oh, that was the monthly chart. Okay, sorry. My apologies. I pulled up a monthly chart. All right, so weekly view. We do have a break of trend. We haven't broken down on a monthly basis yet. My apologies. I confused myself. It's too early in the morning. I haven't had my third cup of coffee. And we have broken the lower band of the rising uptrend channel. So technically, a lot of damage is being done here this week. Now the week isn't over. For all I know, we'll close positive on the week. Who am I? But it appears as though, at current, as we know it, the semis are clearly breaking down. And frankly, you know, the charts have been saying for a while, I always like to say the market sends us signals. Oh, the SOXS. Okay, I see. I got you. So you're long with that. Okay, so I'm still going to go over the semis here. All right, so the market's been sending us signals for a while now that the semis were topping. Either we were flashing topping tails, we were either breaking out to new weekly highs and failing to hold those highs. Technically, we had broken down below the lower band of the rising uptrend channel back here, but we were able to recoup losses, and that's why I'm staying humble. You have no idea what these guys are capable of doing, trying to spike this market up higher. So I don't want to give you a guarantee that we're going to move lower here. We're going to deal in probabilities, and the probability is that yes, we are going to move lower here in the coming days. So again, RSI, lower highs, lower lows, Stokes, lower highs, lower lows. When this really becomes a major, major concern for me is when you have Stokes trading down below the 50 mark and they are continuing to decline. Because when you get a rally, you're going to see ruthless rallies back up higher. Hey, Pat, good morning to you. And all of a sudden, that rally is going to fade. And that's what happens. That's why these bear markets become self-fulfilling in many ways, because you have the small investor that believes it's safe to go back into the water. They chase stocks up higher only to have the rug pulled out from underneath them by Friday afternoon. Or they go chasing the market at the open, like we're spiking up this morning, and by 10:30 a.m., all of a sudden they're sitting there and they'll be sitting with a margin call the next couple of days. And they have to sell their winners because they won't sell their losers. And it just feeds upon itself. So I would just encourage people, when you see action like this, please, take a step back. If you have cash, sit in cash. Lighten up. Far too many people want to be heroic. And I was guilty of it. At times I still am. It's human nature. But at times like these, it's best to do nothing. I don't agree with Jim Cramer on much, but on this I will agree with him. Stop trading. Stop trading. Because if you're looking for your own worst enemy, at times we need to look, and that includes myself, we need to look in the mirror. because that's our own worst enemy. Our behaviors, our impulsiveness, and frankly, and I'll speak for myself because I'm not a good day trader. That's why I don't do it. We trade too frequently, and you're trading against these algos. And there's no way the human mind is going to keep up with a high frequency trader. So on a daily basis, the SOXS, we did break out and close at a new high. What do? Breakout point failure. And we know that when we get breakout point failures, we're going to trade at a bare minimum down to the lower band of a prior trading range. And there's a strong possibility that we break that support level. So here was the lower band of the trading range at around 251, give or take. We smashed right through it like a hot knife through butter. Might we get a rally back? Sure. Will it probably fade? Probably. So I would not be a buyer of the semis here. I would, frankly, I'm not looking to buy anything. I do have a short list that I'm building. Some investments for the longer term that are paying dividends. But frankly, I'm looking to re-lean into the short side of this market because that's where the money is in all probability going to be made. And if people think that the Federal Reserve coming out and cutting rates is going to cure a virus, they're out of their minds. If anything, it's the worst thing that they could possibly do. Because if you think about the economics of it all, excuse me, folks, my voice is still going. If you think about the economics of what they're planning on doing, is you have China, which is shut down. That means that you have supply being cut off, yet there's still demand. So if you make more available credit to the public, what happens to the prices of the remaining products? They go skyrocketing higher. So if they cut rates, it's inflationary. So if they want inflation, sure, that's the wisest thing to do. Cut rates in the middle of a supply shock. Go figure. It takes a guy working out of his house to figure that out. And with that, folks, I'm going to say everybody have a very, very profitable trading day. And members, I'll talk to you tonight, and be well.